What is up, everyone? Welcome to the Tuesday edition of Get Technical. We're getting a little bounce on the indices. Looking at QQQ. Making some trades this morning. Little scalp action on TQQ earlier today. Let me know how you're doing in chat. Give me ones for good. Give me a 2 where I'm not feeling it right now, but I know I can get there. Take profits and run. Exactly. I took my profits and ran. Exactly, Rich Kaiser. Yep. So this morning I was doing my little scalping thing with options on QQQ. And then the afternoon, between, look at the time, like between noon and 1, and maybe a little bit before that, TQQ, which is the triple leveraged ETF. Mirroring the Qs. All right, let me check how my babies are doing here. Jim is a 1. Captain Cappy, that's an 11. Yogi Bull, solid 1. Not quite totally feeling good. Mikey the puppet, but knows they can get there. That's the important thing. Dawn puts. I thought that was a rumor. Bought the dip. Let's go, Alex. Alex, let me know what your signal was. Okay. Stop the music, guys. Buying the dip. This is something that is very important right now. This is a timely thing to talk about. Buying the dip. Give me a 1 in the chat if you buy the dip. Full stop. Give me a 2 in the chat if you buy the bounce. Give me a 3 if you don't know the difference. 1 for buying the dip, 2 for buying the bounce, 3 if you don't know what the difference is. I got to get this straight. Jim is a bounce boy. Rio's a bouncer. DJ likes to take some risks, also do the bounce. I like it. Ronnie's a bounce in. What's up, Brent Slava? Best damn ponytail in financial news. Rich Kaiser buying the bounce. Hurt Scrambler is buying the dip, not the bounce. Hurt Scrambler, interesting. I'd like to know more about that. So just no signal. You just if it's low, I buy it. Buy low, sell high. That's what my daddy taught me. Alex, all right. Majority 2. Okay. Guys, we gotta switch up the narrative a little bit. I think a lot of folks are getting burned up or have been getting burned up because they just buy the dip, but it keeps on dipping. You gotta buy the bounce, baby. All right, so who wants to let me know why you should buy the bounce? What am I trying to explain here? Let me know in chat, and then I'll show it on the screen. And then Captain Cappy, of course, being an aristocrat among unwashed peasants with his special option spreads. Which, by the way, Captain Cappy, I will read your letters, but you are so verbose that I'm sometimes reticent to read all of it. Or reticent. I don't know how you pronounce that. I didn't get a proper education. I went to a state university. Smash that like, guys. All right. So the definition of buying the bounce versus buying the dip. That's hey, Aaron Bree, can we make that the title instead of what we got right now?
What was that, sir?
Should you can you make the title of the video like should you buy the dip? Or make it why you should never buy the dip. Provocative. Guys, do you think that'll get some clicks?
Why should I make the never all caps?
All caps never. Buy the dip. And then I'll do a photo like this. Do it here. Can you screen cap this? Hold on one sec. Yeah, screen cap it. Actually, get both of us. Get both of us.
I'm not. Wait, I can't do the face and screen. Someone watching this, screen cap it and email.
No, screen cap it twice. So do me, and then we'll get you, and then they Photoshop.
Okay. How do you?
All right.
I'm on a PC right now. How do you screen cap?
I think there's a button that says print screen.
Print screen.
Yeah, it's up. It's next to F12, kind of.
Oh yeah, I see it.
Brent's got it. Brent's got it. All right. Are you ready? So stupid, but you know you guys will collect.
Oh, wait. One more. I got to take the comment out. Or we can leave it in. There we go.
All right, that's it, guys. Marketing. Rich Kaiser's got it. Shift print screen. Awesome. Snipping tool for the win, Roy. That's what I'm using all the time. Roy, is that a picture from your passport? You look great. I'm just trying to understand the scene. Bio noob.
What up? Yeah, I'm used to on the Mac. I think it's Shift Command 4.
It's a lot easier just to do a screen capture on the Mac. Yeah, for sure. Buy the dip. You have to use like an app on Windows. Buy the dip or buy the bounce. Hashtag buy the bounce. And boy, did we get it. We've got Aaron Bree's favorite pattern here on the hourly. I'm on TQQQ. I'm just going to go to QQQ. It looks the same. Aaron Bree, what pattern do we have right here?
That would be a V-shaped reversal, a V for Vendetta.
Absolutely. Boink. Everything is there. So what is an entry? What line do we cross for an entry on the Qs? Did you guys draw a trend line on the right side of your on your price action on your candles? A V for victory. I wouldn't say victory yet. I took my profit and got out. Look, we've done this. This is like a special. We did this. I don't know how many episodes ago this was, but we did the same exact thing we're doing right now here. Okay, so this was back in April. So just go back and watch the April episodes. We did the same thing. Go back. Yeah, I'm on the daily. Go back and watch these. Definitely. These were some really good episodes back in February. We did the same thing we're doing right now, which is it over? To my eyes, it could go lower. Why do I say it could go lower? Because this could be the neckline of this upper pattern. I'm not afraid to say it. I'm just saying it could. Why could this be the neckline? Shoulder, head, shoulder. Armpit. Neckline to head. Subtract it from the neckline. Gets you down to 336. Could go lower, right? That's why I'm taking profits and running. Roy, driver's license from 2012. All right. Thanks for clearing that up, Roy.
Shay, don't apologize for being late. We don't even take attendance until 1:20, so you're good. By 9 minutes. Yeah. I've actually I don't have my driver's license right now, so I've been using my passport for like all ID purposes, and it's so stressful like to have it with me at all times.
Just don't put it in the washer. I find that's more likely than actually losing it. I used my passport for a good 6 months in college and then washed it. And they got the dirtiest look from British Customs, like an old lady.
You were like, what? You've never accidentally left something in your pocket that you've washed? Happens to the best of us.
Not to British old ladies. All right. So at any rate, it could go lower. It could go lower. But we shall see. We shall see. We want to get higher highs and higher lows. Yeah. A really nice level to break is going to be looking at this sideways channel and showing that we can do better. So just watch for it to go lower, guys. I'm this big green candle is not an indication to me that a sell-off is ending or that a correction is not on the menu. But yeah, left shoulder, real head and shoulders never really look like perfect like they do in the textbooks. Then reverse, is that a good indication for you? Double bottom and bullish engulfing candle on the 5 and 10, then reverse. Is that a good indication for you on a short term? Yeah, because with a double bottom, you always have a price target. That's what's built into the pattern. So you're looking at what, the 5 and 10. So when I was trading these earlier, so I was on the 10-minute. I was using. No, that's not it. Well, we can talk about that in a minute. I'll have to go back and retrace what I did. Double bottom. Where do you see a double bottom? Is it this? On the 10? Where is it? SWW. We got a rounding. Got a little rounding action. And when you get that rounding action, you take your ruler tool, go up like this. This is the price target, and it already resolved. See how it's immediately up to that previous resistance, probably meaningful back here. Yep, it's support. So you just take the lowest point. Whoops. The lowest point up to the highest point of the swing high, which is the neckline in this case. It gets you right up here. Already resolved. And then we broke out of that for the broader double bottom, or the broader rounding bottom. And that actually gets you right to the price point that I set when we were zoomed out looking at the daily. I think that's from the daily, yeah. So looking good above 362, I think. Saw it close to close yesterday. Oh, close to the close yesterday. Well, no, because then it went lower. What do you think this emoji is? Nice haircut, dude.
Buffering. I don't know. That's a good question.
What is that emoji?
Is it like a facial expression, like a confused, like someone's like thoughts are buffering?
I thought it'd be like a spinning wheel to show that they're thinking or something.
That's good.
Spy doing a pennant on the via noob. Spy doing a pennant on the 10-minute. Let's take a look. Spy. Pennants are the best patterns because they are the most likely to resolve. Yeah. Yes, my friend. Noob 100. All right, so this pennant is forming right at a meaningful level, right? So you're trying to get out. You're looking at SPY, S&P 500, SPY. We're trying to get out above this level. We hit resistance. We got lower highs and higher lows. The most likely pattern to resolve out of all those little chart patterns is the old pennant, the old bull pennant. All right, and there are two ways to measure where this thing's going to go. All right, how do you set your price targets for a bull pennant? Oh, now everyone's saying buffering. Thanks, guys, for the buffering. Everyone put a buffering in the chat if you're feeling good today. Good to see it. By noob with the tab. Thank you. Yeah, definite bull pennant on the 10-minute. Very tradable. Remember that you've got leveraged ETFs, you've got options. You can get in here and trade this thing without having to worry about individual stocks and their greater exposure to volatility. Although we will take a look at Microsoft and Apple here in a minute. But how do we set a price target for this bull pennant on the 10-minute chart? Always remember your patterns are more likely to resolve if they're over greater time frames. What does that mean? If you're looking at a 10-minute chart and you see a pattern, it's less likely that that one is going to go all the way to its price target than if it were over several months, if you're looking at month candles. Nonetheless, they do really tend to resolve. So we take the swing high, which is the highest point within the pennant, the first swing high anyway, the first high point, down to the low point. We measure that with our little line tool vertically, and then we add that to the breakout. So we won't know how we're going to set our conservative price target until price breaks above the sloping line of resistance here on SPY. And then we'll add this measurement that we've already done right to it, and we'll set our price target. Wouldn't be surprised if it's going to line right up with some resistance in the past. Excuse me. Now that's conservative. You can set your aggressive price target before that. So you go to the previous point of consolidation up to the high point, your swing high on your pattern, to create your pull. And then you add your pull to the apex. What is the apex? The apex is where your sloping line of support and resistance meet on your pennant. It's the pointy end. And then you add that there. That's the difference between the two. Conservative comes from the breakout level. The pull, or the really bullish price target, needs to be added to the apex. And now when we do that, we turn that puppy sideways, and that's going to give us a breakout price target. And look, that showed up as support in the past. Add some validity to using that target. So there you go. Breaking out from that bull pennant, bull case is going to be a price target of 438.89 for SPY. Pretty nice.
Pretty nice. Tiny Pie, if you're out there, Tiny Pie, I did not appreciate. You know what? I'm just gonna put this. I'm gonna get this on the stream. Tiny Pie just took a screen grab of our faces earlier, well, yours primarily, and made maybe the most unsettling thing that I've ever seen in my life.
Do I want to see it?
I mean, it's not that bad. It's you'll see.
Can we show it without getting banned from YouTube?
Oh, 100%. I wouldn't put it up if that were the case.
Okay. Yeah, I like where SPY is right now, but you got to see it, right? Like this pattern doesn't matter until you get the breakout. You can still get a breakdown. Pattern's not a pattern until it actually gets confirmed all the way through, which means it broke out of its resistance. Yeah, there you go on SPY. I want to look at Apple AAPL. Yeah, looking very similar, right? Bit of a broadening wedge here on Apple. Or a tomahawk or a megaphone. I hear it called many things. But this is another pattern where the apex is very important. So you got to set your lines up right. Where's that picture? What are you doing?
I got it. Do you want to see it?
Yeah. I don't know. Oh, geez. All right, make it go away. Get rid of it. Thank you, Tiny Pie. Do you think that'll get more clicks if we use that? Tiny Pie? I don't know. I think you gotta. I don't know if that'll work. I think out of all the shows, we might be the one that's most out of touch with our audience, or the most in touch. We're one or the other.
I think I don't know. We don't know what they mean when they say buffer in, but yeah, see, Master of Stonks, you know what I'm saying. It is unsettling.
Yeah.
Tiny Pie, you're a wizard. Harry, keep doing your thing.
Yeah. Wait, what? What do you mean the SPY went down from the pick? Oh, that pick made the SPY go down? Guys, let's do a quick survey. Just I'm sorry about that, Rabar, that you can't get that out of your head, but now you have to deal with it. Give us a 1 if you think we're really in tune with the pulse of the trading community here on Get Technical. Give us a 2 if you think we're totally out of touch. Yeah, confirmation is really important. So L Weiner is referring probably to what I'm saying about this pattern is you need confirmation of the pattern. If it doesn't, you don't enter here. That's a good way to get whipsawed, and for stupid reasons. That's like I got whipsawed for a dumb reason. Noob. 3. Okay, so we're apparently in touch. Wow, guys, that means I can't tell you how much that means. Baron, what's up? Hope you're doing well, man. I hope you are doing well. Shannon with the 1, thank you. The eyes have it. Awesome. Falling knife zone, Rich Geyser says, we don't know. We don't know. Listen, sentiment follows price, not the other way around. All right, we let the market do the work for us. I'm not here to project myself onto it. I'm just a man. Noob has the same flannel. Would I buy the pennant breakout? Noob asks. Yeah. But I wouldn't buy it for a swing trade though, Noob. This is I'm on the 10-minute chart. Let me see what it looks like on the 30. Yeah, see how it starts to look like shit on the 30? On the 10-minute, on the time frame where I can clearly see swing highs and swing lows, which is the 10-minute right here, instead of just seeing spotty stuff. And then that's the thing that I post on social media the next day and say, oh, I saw it the whole time. When I can actually see the swing action, that's the time frame that I'm trading on. Does that make sense? So if I'm trading a 10-minute chart, I'm looking at day trading down to scalping. Thank you, Dutch. Good to hear, Baron. Good to hear. Let's all everyone get up for feeling better every day. So if I'm trading on the 10 minutes, I want this breakout, and then I expect the move to be swift. I would not hold that position overnight. Absolutely not. That's my quick answer for you. So if I get to my price target, or if I don't get to my price target, let's say we get something like we break out, enter, we get into this supply zone, which I've marked here. We'd probably get a pullback there. We start getting up and looking kind of decent, but then we close like right here. I'm out. What's the levered SPY? Yeah. I've never actually used it. I don't think. Is it XSP, guys?
I think that's a mini one. Or
I'm in. Oh, okay, like a futures. I'm a bear and bull SPXL. I'm an options guy, but I'm starting to like the ease with which and the liquidity I'm getting in and out of these leveraged ETFs during the day.
I've got a bunch of favorite leverage ETFs to trade.
Then what's the SPY one?
I think it's SPXL.
SPXL.
SPXL is the bull one. SPXS is the bear one. But I like the what is it? SOXX is the semiconductor. Or no, that's not the leveraged one.
Yeah, this is it. SPXL.
I was saying the SOXX isn't the SOXL is the
So in this case, to just close the conversation on scalping SPY on these 10 minutes, this is just one approach that you can use. You can use this approach. And then what you can do also to get an idea is, I mean, it's very clear. You can draw a line from the apex and get an idea of the sort of the mean here. And that's just about resistance. I didn't draw perfectly, but where those two lines converge tends to be where resistance is in most cases. But I could, like, this bottom line could be probably at a different slope. Yeah, it could be more like this, like that, and come out a bit further. And then that convergence of those two lines would lower this down. And then that apex is much more clearly the line of support and resistance within the pattern. You can aggressively trade within your pattern around the apex line. You can do that for pretty much every pattern that is symmetrical. Semiconductor ETF, ripping. Yeah, I don't know if I would trade just on this candle though. Like maybe trade within it during the day. We start with our hour. We check for a trend break, which we got that young trend break, right? Even just like that, your entry would have been a break above that line. So you're looking at the hourly chart. You're looking for that solid break above that line. You're okay with a 10-minute break. You got the 10-minute break. You're feeling good. You're trading that thing. You're up 0.5%. You know you're hitting some resistance right here, right before the gap. But you're letting profits run. You're not stopping out because you don't see any signs of a reversal just yet. You know, the more times that a resistance level is tested, the more likely it is to break through, and that we've got a gap to fill right here on SOXX. So entering on this trend line breakout would have been just fine there. Can you sell? SOX is a SOC ETF. Yes, that's correct. Booming industry. There are at least new 2 pairs of there's never mind. Bad joke, and my delivery is awful. What's considered a solid break? Aaron, I think a really solid break is a day close above, like the body of the candle closes above your line of resistance. Excuse me. So, but let's look at Palantir. Let's go back in time on Palantir. Let me delete all of my stuff, all of my heartache. And then, can I? Okay, yeah. Let's go back. So this is Palantir. This is one of the best trades I ever made. I revisit this all the time when I'm by myself on a Friday night. I get out my little Greek yogurt and I play songs by the Cranberries. I say, Alexa, play songs by the Cranberries. And then she does her thing. And I peel open my yogurt and I go back in time to the end of 2020. Things are simpler. And I got this awesome big ass bull pennant right here. Look how big and fat this thing is. Alexa, stop. We get kicked off YouTube for that. So on this breakout, let's go forward a little bit. I'm not entering yet. I'm looking for a solid body close above my line of resistance here, which I'll make the thicker line. That's my line of resistance. So let's play the solid breakout. There. I entered when this candle broke out above this pennant. And then look how this resolves. The trade is broken, Neal, you might say. Look at this. Swing high, swing low, added to the breakout point, turn sideways, price target hit. Something to keep in mind with price patterns. They tend to resolve no matter what. But if we look, that's a shitty example. I'm trying to think, maybe we go to SPY to get a better one. So a solid body close can be a day candle above the point of resistance or the line of resistance, or even down to like 15 minutes. is what I'll use. Thank you, Happy Muhammad. I agree. It was an option. It was a call option. In the money call option. What would be... You could go back to Palantir. I know that one pretty well. Even though I seem to have forgotten some stuff. So if you look at this pattern here, you have a head and shoulders. Inverted. And then this line right here that we touch as resistance, we refer to as the neckline. A confirmation is a solid body close. It can be daily, which in this case, you got a very solid confirmation. Boom, for entry. Or it can be something as low as like 15 minutes. Not 15 months, 15 minutes. Which you can also use. And had you used that, you could have gotten in just a little bit earlier and caught some more of that upside. But then this breakout kind of failed. It broke down when the rest of the market started to take a shit. So Palantir is off the burner for right now. Aaron, when you say a solid body close, the candle shouldn't have a wick. No, it can have a wick. It's just you want the body part to be above the point of resistance. Because when you look at a candle, when you look at a candle and it's a green candle, the close is higher than the open. So this line right here, let me do a little thing. You want this line to be above your resistance. And then when the next candle starts, ideally it's opening higher. It's looking like that. But this is what I mean by a body close. The wick can do whatever it wants, but you want the closing price on your candle to be above that line of resistance, and that's your entry for that breakout trade. Do we have a guest today? AB? You're welcome, Aaron. All right, what's next? I thought we had a guest today, but I think something might be wrong. Producer AB. Don't we have Sylvia on today?
No, we have Tim Quas. Sylvia is going to be joining us on Thursdays from now on. Yeah, laterally. Sorry, my Tinder was just blowing up. I mean, you wouldn't believe how many matches on there, just out the wazoo. No, Ryan Faluna is in the office, and just saying hi to Ryan. He's a good guy.
Can I ask you just? Ryan Faluna, I'm familiar with him, but I don't think I've had the pleasure of meeting him. I just want to ask you something really quick. On your on your Tinder bio, do you have YouTuber?
I have streamer.
You do, don't you?
No, I don't.
Oh, come on, man. Leverage it.
Just say YouTuber. Then people are gonna think like, oh, this kid might have like 1 million subs or whatever. And then I'm like, no, I just host a couple shows.
You can tell them that every episode of Get Technical that you do gets at least 150 likes, which we're going to achieve today.
Yes, let's manifest it. Manifest it. Wait, is this an emoji?
Socialist.
What
Social
could the
distancing.
socialist emoji be?
Social distancing.
Oh, I thought it said socialist.
Which is a socialist concept. Guys, get us up to 150 likes so producer AB can get more Tinder dates.
Yes, I will add. If we get to 150 likes today, I will add that to the bio immediately, as soon as it happens. Aspiring YouTuber, yep, sure, throw that on there. See,
No,
but then
that's
it's like,
bad. Then you
yeah,
look like you
how
don't
are
have
you
a
an
job.
aspiring YouTuber? All you need, you have a cell phone, you can make YouTube videos. You can't be aspiring. You're just a YouTuber. You might not be a big one, but you can't be an aspiring one. What's up? What up, Dylan? What's up, Rat Pack? How we doing? Smash that like.
All right. Enough of that stuff. We've got one of our favorite guests, one of your favorite guests, Mr. Tim Quast is here in the backstage. So we're going to start talking about some market structure. Again, today, like the last time we had Tim on, another wonderful day to get an idea of who is participating in the market and what is their sentiment. As we are in an extremely volatile time across the board. Let's go ahead and bring on Tim Quast. Hey, Tim.
Welcome. Guys, good to see you.
Good to see you too.
I can't believe on a day like today in the markets that AB is hanging out on Tinder. I mean, this isn't it's not a boring day. We've got, important stuff to talk about, and AB's trying to set up dates. I mean, you could call it an efficient use of time, I suppose. I mean, it's multitasking.
I think
I can barely do 80% of one thing at a time. So it's pretty impressive that you can arrange dates and look at technical patterns at the same time. Far more talented than I am, AB.
That's actually what my dates consist of. We just look at charts and patterns and see if our notes match up, really. Oh, you had a head and shoulders there too? Me too.
There you go. Well, that's a uniquely distinguishing angle that you're plying.
A niche. I'm trying to, just do one thing and do it well.
Well, we have no quantitative data to predict how well that's going to go for you, AB, but we could look at how match is doing. We could do that.
There you go. We give the data 0 to 10 rating, I think is a good way to do it as well.
We could. Yeah. And maybe you should, when demand is rising and supply is falling, that's when you should be setting your dates, AB, because your probabilities go up.
Yeah, I love it. It's all, it's a numbers game. As long as probability is on our side.
That's right. That's right. It's all about the probabilities.
Speaking of probabilities,
yes.
Tim Quast, let's take a look at what's going on from a market structure perspective. And I just want folks that are uninitiated so far to the concept of market structure. And when we say that, we're not talking about what price looks like on a chart. We're talking about the underlying buyers and sellers at play. And what the actual market, a market of buyer and sellers comprises, or is composed of, rather. So before we do that, Tim, could you give a brief introduction to yourself? No need to, don't just read straight off your Tinder bio. Just give us an introduction to yourself and Market Structure Edge.
Certainly. And Neal, it's good to see you too.
Thank you.
So Market Structure Edge, I call Market Structure Edge the new way to trade, and it's marketstructureedge.com. I have, as I like to say to you, Neal, I have wasted my life on market structure so everybody else doesn't have to. And you can just benefit from it. The basic concept here is that there are rules that govern how the stock market works. The great majority of people think that it's this place where investors are trying to find innovative companies and invest in their equities. Oh yeah, that's part of it. But what part of the market is driven by that motivation? Because that motivation differs from a motivation that has a desire to trade something in 300 milliseconds. That is market structure. So we want to apply the rules that govern how the stock market works to navigating it profitably so that we can take gains and not chances. And it's the most overlooked concept in the whole market. You still have vast numbers of people rooting through financial performance. I've got a web meeting with the whole team from a mega cap company today that has a big analyst day coming up, and you cannot imagine the amount of work that goes into that, and yet it doesn't matter. These are the things that most people don't think about. Does an analyst day, a day when a public company gets together with the analysts that cover the stock, matter? Well, it might to speculators. Does it make any difference in the broad scheme in how that stock is valued? Well, it depends on the composition of the demographics driving shareholder value. If 9% of the trading volume is coming from stock pickers and 91% of it is coming from indexes and ETFs or short-term traders or derivatives bets, then those are the things that are going to set price. And so that's what we take into account at Edge. We can take all of that and put it into an algorithm that reflects demand. And then we can look at the rules that govern supply, which is short volume, and figure out where should we be? Where do the demand-supply relationships give us the best opportunity? And when they don't look good, don't do it. It's that simple. It's as important to be prudent about when you take chances as it is to understand entries and exits, in my view.
So I already have tickers and I get first dibs because I'm the host of this show on which tickers I really want to look at. And guys, this is going to give us a good idea of what the sentiment is going into the market for these big buyers, big sellers, and who's really at play.
Right.
So Tim, would you mind sharing your screen?
Sure. Okay. So, and folks, many of you, and by the way, I mentioned yesterday that we have this 2.0, beta 2.0 version of Edge coming out, and I'm way behind. I got a load of emails from people asking to participate in that, and I'm way behind. But I will get to you. And so if you want to look at it, I can do that. TQ at marketstructureedge.com. May take me 48 hours to get to you, but you can send me an email. So, and it's easy. Put in a name and an email, and you can try this. You don't have to use a credit card or anything like that. It's just a way to think about the market differently. So,
Tim's email is in the chat, guys, if you want to request the beta.
Thank you. Yeah, just ask. Okay, what do we want to see, Neal?
So really quick, I wanted to ask chat. So guys, I'm really interested in the a few big companies that are really driving the movement of the S&P 500 and NASDAQ. So I'm wondering if chat knows which companies might be on my mind.
Okay.
I'm looking at the underlying here, guys.
Okay.
So there's that email, TQ, marketstructureedge.com. Which companies drive? Which is just a couple names that absolutely drive those indexes, those indices that we use as proxies for the overall health of the stock market. Drop it in the chat.
Comprising 20% of the S&P 500, roughly? Is that what you're thinking about?
You know where I'm going. You know exactly where I'm going.
Yep. Yeah. And it's one of the first things I do every day, by the way. So here's how I start my day. And I trade. I wear 3 different hats, but I trade every day. Made a couple of trades today. I sold AMR actually. So it's a beautiful example of awesome supply-demand balance and how to make money in a very short period of time. But let's go look at the FANGs, because that's where you're headed, I presume, Neal.
Yep, so, I was thinking Apple first. Yep.
Yeah, Apple and Microsoft are the two that you're thinking about, right? The big names. So I like to look across my dashboard here at Edge for the supply-demand balance. So demand is the green line. Supply is the purple line, whatever, they're pastel colors. And what you ideally want is rising demand and trend that is below, or supply that is below trend. For example, financials. Financials actually have performed reasonably well here. Unlike the FANGs. The FANGs, see the demand side? It's below 5. 5 is only halfway there, but generally it's the fulcrum. The more time stocks spend above 5, very simple. You want to own stuff above 5, and when it returns to 5, go find something else that's rising past 5. And you can just repeat that over and over. And so the fact that supply, short volume, is above trend and demand is flat and not even at 5, that's going to be a difficult thing for the market to overcome. I still think, based on the broad sentiment in the market, that what's happening today could repeat itself a couple of more days. I'll show you why. But when we look then into the fangs here, and we want to look at the supply-demand balance for Apple and Microsoft. So we come to Microsoft first, and here's the data that matter to me. I don't pay attention to anything else. I mean, there are all kinds of things you could look at to help you determine whether Microsoft is a good thing to buy or sell right now. And I will look at it and see it's a 2.6 out of 10. So we know that it's way below 5. The trend is down. It's 36% short. That trend is down. So supply is shrinking. That's good. 46% of all trading volume in the S&P 500 is short, is borrowed. It's the supply chain. It's like credit. It's like using a credit card. But that number, when it gets above 45%, those are levels that are well outside the norms. There's the last price from yesterday, trades $21,000 at a time. Every trade trades 800,000 times, close to that every day. Market cap of 2.1 trillion. Active money is the leading behavior. Active money has been selling the stock, interestingly. So then we want to look at the supply-demand balance, and here we have it. So you can see that the demand side has just not been very good. I mean, it's been at 5, but you really have to be 5 and rising to produce returns. If it's not rising above 5, you know that it's unlikely to do better than the market. When it dips below 5, well, that's not good. You know, there's no question that these aren't great conditions for Microsoft. When was it good? Well, you'd have to go back even further than 90 days, but you could say this whole time it was above 5. When short volume exploded way above trend, great reason to leave. It's a great reason to leave. You're unlikely to get better gains. So what we want to see is a reversal of the demand curve. We want to see rising demand. Short volume looks pretty good. So really, that's what we're focused on. Does demand return? And don't buy falling supply. It's not a good idea. Even if the stock's up today. Today is not a pattern. Today is merely a day. One day is not a trend. And so this tells us the trend isn't good no matter what happens the next couple of days. I would not buy Microsoft right now. So then let's go look at Apple. Apple, 5, topped. That just means it spent more than one day at 5. 41% short. Short volume is rising. Demand has stopped rising and supply is increasing. Well, it's probably not going to be great. Last price, $18,500 per trade. These are very liquid stocks. Look at that. The average in the market is closer to $5,000 per trade. 2.4 trillion in market cap. Active money is selling both of them. Stock pickers have begun selling core holdings. That is a problem potentially for the market. And we could talk about that as the last thing in 30 seconds, Neal, if we want. But let's expand out and look at 90 trading days. I like to look at 90 trading days and look what's happened recently. If you were going to leave, your last warning is right here. When supply is rising and demand is falling, you've already probably missed the best point, but that's fine. You can't capture it all. But it's not great. It's got supply above trend and demand that has stalled and is not rising back above 5. You want to wait for those conditions to return. No reason to waste your money on something that's not going to rise. Wait till the probabilities are in your favor.
Very, very well said. And I liked one of those quotes. One day is not a trend. Good stuff.
One day's not a trend.
Yeah, that's great. Everything that we're doing here, I've said this before, but I believe that market structure goes hand in hand and actually makes up a large component of a modern trader's understanding of technical analysis. What is happening with price, what's driving it, all of those sorts of things. And one of the very important thing is that you don't want to be trading something that's not in a clear trend. You want the trend is your friend no matter what. So when you get a candle like today, everyone gets really excited, and there's going to be a lot of tears perhaps tomorrow morning or tomorrow afternoon if we don't all of a sudden get a beautiful trend continuing upward. So one day is not a trend.
That's correct.
All right, so we took a look at Apple. Now is the part where everyone shows up at our door with lanterns, perhaps pitchforks, and start screaming tickers at us. We already got
Okay.
the token
Yep.
CEI ticker.
CEI. Okay.
Yeah, we're just not complete without getting that one.
And for AB's benefit, I'd already put match in here. Let's look at match really quickly just to see where match is. All right, we got to do this, right? So, so match last week was a great stock to buy, right? So if you bought it right at the end of August by rising demand and the supply is right at trend but trending down, that's probably going to produce some returns. And the moment demand begins to fall and supply begins to rise, that's when you leave. And again, you won't capture it perfectly, but wow, you could have had a very nice return in there, probably a 15% return. How about here? Well, when demand stops, if you bought rising demand, rising above 5, and it stops rising, today, probably doing okay. I mean, I'd look at this and say the supply, I haven't looked at the price. I don't trade price. Yes, I want to know what I'm going to pay for something because there's money on the line, but it's not what makes the decision for me. I don't care what the price is. I care about what the supply-demand equation tells me because it's far, far more reliable than price. Price is capricious. You have to realize how often things trade. Things trade, a stock like Match trades thousands and thousands of times a day. So what the price is at the moment could be the 11,000th price of the day. Well, what difference does that make? What I want to know is what the supply-demand equation is. But I would leave. If you're in it, get out because the demand side has stopped rising. So take the money and go, let's go find something else. Okay, so what was it? Tell me again, Neil. Can't remember what that was.
CEI.
CEI. So here are the limitations on the national market system data. And we run into this periodically because retail traders love OTC stocks. I mean, we have seen a boom in what's called the over-the-counter market, what we call the pink sheets, the gray sheets. That market has 11, 12,000 stocks in it, and it doesn't have the same rules, does not have the same data. It is the Wild West. It's a fabulous free market. But because the data rules are not the same, we can't track data for it. We're confined to the national market system where there are heavy regulations that permit us to develop quantitative rules and algorithms to measure supply and demand. So if it's there, or if it's the NYSE American market, we're not going to have that data. So I don't know if that's the case. If it's a new IPO, it takes us 20 days because we've got to have for our algorithms to be able to tell us, well, what is sentiment? What are the behavioral changes over time? That takes a data set. So I don't see it.
All good. We got Square and PayPal from Tom Brady here. So we've got another celebrity guest.
Okay.
Nothing but illustrious guest here on Get Technical. So welcome to the show, Tom Brady. Big fan of your sports.
Right, and congratulations on the win Monday night. That was awesome.
Big win for Tom Brady.
Monday. Sunday night football. Sorry. Yeah, that was terrific. Okay, so here we are, same drill. Let's look at Square. I like to this. What it will default to is 30 days, and right away you can see it's spending more time at 5 or below than above it. Weak tops, not good. If we expand back, that you just drop here and go, okay, I like to use the profiler default as the backtesting engine default. It'll use 90 days. Why 90 trading days? Because indexes rebalance every quarter. People make adjustments to strategies. Hedge funds look at their risk management schemes. Indexes and ETFs may change the composition of a basket that they're using to track a benchmark. So you don't want to use 15 years of data. That doesn't tell you anything. Money has changed dramatically over the past 15 years. There's no value in an immense data set that doesn't give you an apples to apples comparison. Look, it's been challenging really since August expirations. Right at August expirations, options expirations, a huge part of the market, everybody moved away. That was the first breakdown for tech. We really saw it in September. And look at short volume. It was just astronomically above trend. So when you see this happen in the data, if you own Square and you see these conditions, this massive spike in short volume and falling demand, you know the price is going down. So leave that. And you say, well, here it popped back above 5. Yes, but if it's tops, leave again. You have to be very disciplined with math. So look at this. Short volume was rising at the same time as demand. I'm probably not going to do that. That's not what we're looking for. You want to first see demand rise and supply fail to keep up. There can then be a surge in supply to try to meet excess demand. But if those conditions don't exist, not the place to be. And right now, demand is falling. Supply side's fine, but you want to buy the reverse of this. These conditions, I would not touch this till after October options expirations. Then we'll look again because people's minds will change, strategies will change. That's when you want to look. And when is that? About the third Friday of this month.
Very clear there.
PayPal.
Yeah, there you go. PayPal. And I think we got time for one more after PayPal, guys. So,
Okay.
So after you guys like the video, please go ahead and get us with the ticker. Hit us with the ticker.
Again, here, the challenge is the amount of time that PayPal is spending below 5. We talked about this in September, that we saw at index rebound. So here, let me just tell you really quickly about PayPal. They're very simple again. This is not complex stuff. I'm doing it. It can't be complex, right? So if you have rising demand and falling supply, that's a good outcome. But if the moment short volume jumps above trend, leave. It's that easy. All you have to do is look once a day. Before the market opens, check, and you go, oh, short volume's way above trend, and demand's at 10, I'm out. And really, it's not been good. So if it doesn't get back to 5, there is excess supply. Even if the supply side is falling, we got to get back over 5 to have more money coming in than leaving. So just wait for those conditions to change. I'd again say PayPal is something to look at around October options expirations. If we know we've gone about, let's call it 30 days where tech has been out of favor, it may take longer than that. But I want to go find stuff that has got momentum, and this isn't it right now. But you'll know when. And this is a very important lesson for traders. You cannot trade something that somebody else isn't, because there are only 1,000 stocks in the market that make up over 95% of market cap. As Neal pointed out, Apple and Microsoft alone are about 20% of the S&P 500. And so owning something somebody else isn't is not the key to success. It's buying and selling it at the correct times. That's the difference. It's the sole difference. And you want to buy excess demand and sell excess supply. You do that over and over and you're disciplined with it, it's going to work. And you could own the same thing as somebody else and sharply outperform them. That's the key.
Words of wisdom there. Let's do a rapid fire Tesla and then close the show.
Okay. All right. Tesla is, I talked about this in the market desk note for edge users today. And it's frankly, look, it's awesome. There's an example of very high demand. And look at what happened yesterday. So the supply side fell off the cliff, even though it hit 10 out of 10. Well, it could continue to go up. And if we look back historically, that has been the case with Tesla. Tesla can spend days at 10. The moment it begins to fall from 10, well, you might want to leave. You could stay all the way to 5. It doesn't drop below 5. You're still there. I like to say it's like the sunrise and sunset. The sun rises over 5 and then it returns to 5 and dips below it. Well, all during the daylight, that's where your returns are, right? And so look how much time Tesla has spent above 5. I'd be out in here because of high short volume and falling demand. And sure enough, then you avoid this. And it doesn't matter whether you miss a little gain. All that matters is what price you buy it at and what price you sell it at. That's all that matters. Who cares what the price was if you didn't own it, right? All that matters is the return. And you've had a great opportunity for returns in here. And at this moment, it does not look like that's going to end, but it could end in 2, 3, 4 days. So you have to be watching. If you're in Tesla, the moment that this turns around, even if it's a 10, and if you've made a very nice gain here, take the gains and not chances. You know that it's not going to rise this far again because it's already at 10. There's already excess demand. But that's why it has done so well. It's a beautiful example.
All right. Tim Quast, Market Structure Edge. Where can folks get more of this magic?
MarketStructureEdge.com. Try it for 14 days. You'll get my notes every day. I do a demo. There's one Thursday, live demo at 2:30 p.m. Eastern time. I do it myself, take all the questions. We aim to help you make good use of market structure, and we're delighted to do that. So give it a try. Thank you, Neal.
Thank you very much for being with us today, Tim. Have a good one.
You too. See you, my friend.
Tim Quast, Market Structure Edge. You guys, a good company. I'm starting to realize this more and more as I age and I consume more products out there. Owners of companies that get out there and really speak about their offering, their service, their product, their subscription, whatever it is, and really are willing to take your messages, take your feedback, that's authenticity. And Tim is really one of those. So check out Market Structure Edge. That's just one reason. And also the technology is totally unique and very cool. I wish that it was built into a lot of the tools that I use. But I have to use it separately, and that's totally fine with me because it's very helpful. So I just want to thank you all for tuning in on a Tuesday. It's been fun hanging out with you guys. Remember, we're not buying the dip, we're buying the bounce. We're looking for clear signals that something is reversing from a downtrend into an upward trend. Because otherwise you're going to get whipsawed and you're going to cry, and it sucks. No one likes to cry. No one likes crybabies either. Producer AB, what's up next?
We have the roadmap. So if you're interested in NFTs, please join us on the roadmap to learn about new exciting NFT projects and what's going on with your favorites so far, CryptoPunks, all that jazz. We will be talking about it on the roadmap.
Excellent. All right, guys, thanks for tuning in. I'm Neal Hamilton. This is Aaron Bree. As always, happy trading.
Peace and love, y'all. See you on the roadmap.